PowerPoint though.
Okay.
Yeah.
I'm getting yeses and nos. Can you tell this is our first one?
Shit.
All right. Why don't we get started? Okay.
Okay, let's go.
Thank you, Hugh. So yes. All right. So we got enough yes. We'll get started.
Yeah,
Otherwise,
starting right now. So
we'll figure out exactly as we get going here.
that's 15 people. Awesome.
All right. So we're recording, Etienne?
Yeah. Since the beginning. So we have
Okay, so you guys get all of this in the recording. All right, so let's get started. So first and foremost, Happy New Year, everybody. My name's Houston Trong. I'm joined today by Etienne Crête. He's one of our co-organizers in the Montreal Traders Meetup Group. And I want to first welcome you to the first meetup of the year. As well, as you may have been able to tell, this is our first Montreal Traders webinar. So you're in for a treat today. So just to preface things, as I look back, we started this group last January, and the purpose of Montreal Traders has always been to create a community of traders that fosters, sharing, support, and the continued development of us as traders. It's easy as traders to get kind of disconnected and just kind of do what we tend to do as we work in our silos. Unfortunately, for most of us as traders, especially retail traders or independent traders, we don't have the luxury of working in, group environments or team environments when we trade. So it's oftentimes, we have to develop and we have to learn by ourselves. And that's why it's so important. And this is why I think it's so important to have venues like, this meetup group to get a chance to meet other traders, exchange ideas, exchange new perspectives, and most importantly, so that you can keep your edge, right? I always talk about this idea of iron sharpening iron. You can only be as good as the folks you surround yourself with, right? So if you're willing to, hear new things or have people challenge you, then that will grow you as a trader. So, anyways, this idea is basically this. The webinars are a continuation of this idea, right? So we're having another place now where we can connect, especially for traders who have had a hard time coming into downtown, and making it to one of our live events. We're going to run these regularly and get an opportunity to exchange ideas and maybe even bring on some new voices to share their stories. And even better, once we get this community going, set these webinars going, we can even bring in some world-class experts to come in and give us some really good presentations. Etienne and I, we both run podcasts, and we've run the gamut in terms of interviewing, professional traders and experts around trading. And, we can definitely tap on a lot of those guys and have them present some of their the powerful insights to our community. All right, so
cool.
Yeah, so why don't we just kick it off? So since our last meetup, we've had an influx of new traders, and so the purpose of today's webinar is really to share some of the fundamentals, because a lot of the new traders are coming in. I see a lot of some common questions and some common areas that people are getting stuck. So I think today's webinar is going to be about helping a lot of the new new traders in this community, and also give some of you who've asked before kind of a sneak peek around, how Etienne and I trade. So today's agenda, Etienne, if you want to go to the next slide, if you don't mind.
Yeah.
What we're going to cover is a few things, and you probably saw the agenda in the invitation. I'll just give it a moment to catch up on everyone's screens. And while it comes up here, everyone, if you haven't had a chance yet, if you do want to chat with us, please log into the chat pod. You don't have to use a real email address to create an account for yourself. But as Etienne and I were talking about, we love to keep this thing interactive. Unfortunately, we can't have an open mic in this venue, but we'd love to, take your comments as they come up in the chat pod. So sign up and we can connect that way. So the agenda for today's presentation. So first off, we're just going to quickly do introductions for those folks who don't know Etienne and I or haven't met us before. We'll just introduce ourselves. Then we're going to cover off a topic of, the different methods of trading for those folks who may be new to trading. This is kind of the fundamentals. We'll talk about selecting the right trading instrument for you. Then we'll actually share the tools and resources that Etienne and I use when we trade. Etienne trades Forex. He's more of a swing type trader. I'm an intraday trader, and I trade mostly stocks and futures. And so we have different tools, right? We actually have different methods of trading. So in the final part of the presentation, we'll actually talk about how we each trade. So you'll see kind of my rituals and routines that I do every day when I trade, as well as, I'll give you an example of a trade that I took a couple weeks back. and Etienne will do the same thing with his trading and his methods. And then we'll try to take questions throughout the presentation because we don't want to just talk to a wall here. So we'll be looking at the chat pod, and at the end, if we have time, if there are questions, we can certainly do a Q&A. All right.
So if you guys have any questions, just type them in, and we'll just see if we answer them right away or at the end, depending on how it goes.
You got it.
Cool.
So let's go to the next slide. So let's talk introduction. So Etienne, why don't you kick it off by introducing yourself and your trading story?
Yeah, so quick introduction. I'm basically a Forex trader, and I've been trading since 2012 now, so it's been a little bit more than 3 years. I decided to, I had, first of all, a hard time trading Forex, like at first. I had to learn everything, and it's been only since maybe 1 year ago that I started really focusing on it and really putting more energy into it, more seriousness into it. And then I started my blog, DesireToTRADE, a couple months ago, so in September, with the podcast. And that's pretty much how I see it. Like, Forex trading is just a passion for me. Any type of trading is a passion for me. So I've just been going that way, and so far it's really awesome. It's pretty good to talk with traders and just do that stuff every day.
Cool, man. Thanks for sharing. And so I'll introduce myself. So my name is Houston Trung, and as I said before, I trade predominantly stocks and futures. I've been an independent trader, or I started trading about 10 years ago, and I've pretty much traded the gamut of the instruments. I started my trading career trading options, then moved on to stocks, then moved on to futures for many years, and now I do a blend of stocks and futures predominantly. It's probably about 90% of my volume is intraday trading, doing stocks and futures. And so I think, for me, this year is going to be a big year for me. Like, as I said, I've been trading as a retail trader for about 10 years. And this year is probably going to be the year that I jump to being a full-time trader. So, trading full-time, just my capital, as well as earning capital from the folks that I coach. So, it's been an interesting journey, and that's kind of what I've always talked about is, trading is a journey. It's not really a destination. And that's why I love this community, because as traders, we all kind of share that same journey. So that's why I'm passionate about connecting with traders and in this community. So let's move on to the next slide, Etienne.
Yep.
All right. So let's kick into the first section, and that's the different methods of trading. So I'll let Etienne talk about this this topic.
Yeah. So basically, all right. Yeah, I just saw a question in the chat box. We'll talk about the different instruments we use a little bit later. So we'll definitely do that.
Yeah.
So now, in terms of methods of trading, we just wanted to give a simple overview of how we can trade. So, like, what are some ways you can trade? What are some information you can get to trade? And so the first thing is really with information. So there's 3 types of information basically that you can trade with. The first one would be fundamental. So this would concern every news you hear. All about the news, the economic data, that type of stuff. And then there's technical information, which would be in that case more about patterns you see on the chart. So really what you see on the chart. You take that information, you either draw patterns or see indicators and stuff like that, and you trade based on those. Now the third way would be with quantitative data. So really looking at past data, really how the market behaves in terms of data in the past and trading from that thing. So those are the 3 ways. We're not going to go a lot in depth in them, but it's just 3 ways you can use. And the good thing to know is there's no one way to trade. You can use either a combination of those 3 or one of the 3. And good traders use whatever they want, whatever they prefer. Now, in terms of trading, again, you have to decide whether you want to trade over a longer period of time or a shorter period of time. So the first thing you could do would be to scalp. So doing scalping, this would be trading on a really short term. So you take trade and you hold them for a few seconds to a few minutes. And I would say less than 1 hour, let's say. And then intraday would be you take trade and you hold them for the day. So you close all your trade at the end of the day. You can hold your trade for a few hours, maximum the whole day, but usually you close them the same day. That's what Western is doing mostly. And then you have swing trading, which is a little bit longer, which is holding your position for for a few like a few hours to a few days. And this is mostly what I do. So I take a position and I wait a few days or a few hours until I hit my take profit. But that takes a little bit more time. And this is, I think, usually more reliable, so you have a better reward on your trade usually. But that depends again what you trade exactly. And then position trading is like the extreme. So this would be holding your trade for uh, a few weeks to a few months. So really over a long period of time.
Or
This
even
is good if
years.
you want to more invest in forex, so like or just invest in stocks and stuff like that. So you want to hold them for a longer period. That's one way to do it.
We had
So
a
I think
quick
that's the
question
basic.
just around what is quantitative trading?
Yeah, do you want to explain? Because I'm not familiar with it a lot, but I know, yeah, like you can use past data.
Yeah, exactly. Like, quantitative is just basically as the definition says it, right? So as Lev kind of points out, it's probably using the use of statistics. So you're
Hmm.
going to create models where you think that you're finding some anomalies, some patterns where you may be able to have a positive expectancy. So
Yeah, okay.
quantitative trading could be really many different types. It could be using quantitative analysis to do arbitrage. It could be simple quantitative analysis to find areas where you might be finding oversold or overbought conditions. So quantitative is kind of a big bucket, but it's basically using math to try to find maybe an edge where you have a positive expectancy.
I think one of the ways you could do quantitative trading would be using regression or like forecasting.
Yeah, exactly. So doing predictive, you can use predictive models to try to figure out
Hmm.
where the price could go. But yeah, again, the difference between that and technical analysis is simply, mostly technical analysis. When people talk about technical analysis, is they're talking about patterns, like price patterns or chart patterns, whereas the quantitative stuff is more math based.
Yeah, data. Yeah,
Yeah, yeah,
basically.
great example of exactly. You're looking at past history to look see if there's any predictive power in it.
Hmm.
Awesome.
And then when that's done, well, now we go a little bit more into technical trading. So what do you trade? You have three different type of trading you could do in technical trading. The first one would be to trade reversal. So when the market goes to a certain point, then it reverses, and you take that trade in the opposite direction. Or you could do a continuation, which is the second drawing here, which is like a pullback. So when the price breaks a certain area, and then you look for a retracement, and then you go in the same direction as the trend. And then the third one is a breakout. So when the price goes through a certain level, a certain resistance or support, and then you take that trade when it goes like above that area, basically. So those are just three simple ways you can trade, and this is exactly what every trader do. Like any trader, they do the exact same thing. They take those exact trade. They just have different indicators or different ways of looking at them and deciding when to enter. But that's about it. And the key here is really to like select one and get good at it, because all the traders you see, they all have different ways of trading. They all have different indicators or different techniques or different rules. But the thing is, they just have to get good with them, and they just have to execute them all the time. So whether you want to trade technical or fundamental or a combination of both, or whether you want to have reversal patterns that you trade or continuation, it doesn't really matter. The only thing is you have to get good at it. You have to know what to trade, and that's the basic idea behind all the methods of trading. So if there are any questions, I guess just post them in the chat box, and we'll see how to answer them after.
Cool.
But now, Houston, you want to go with trading instrument, which is one
Yeah,
question we had.
yeah. Let's go to trading instruments.
Let's go.
And I think it's a good advice, like when you first begin, I think it's good, it's good advice to pick one method, one instrument, and to go with that, right? So certainly if you're more experienced, then obviously you can have numerous setups in your playbook and you may trade numerous instruments. But the key in the beginning, as to not get overwhelmed, there's this idea of paradox of choice. It's important to do one thing at a time. And there's this concept, that I think, I don't know if you guys have heard of Ido Portal, but he's a really great movement artist. But he has this idea, he calls them the three I's: isolation, then comes integration, then innovation. And that really pertains to learning. right? So when you learn in the beginning, it's about isolation. You do that one thing until you get great at it. Then you can begin working on integrating the multiple pieces together. What you don't want to do is you don't want to start integration or innovation, right? You got to start from the beginning. You're going to have multiple things that don't look like they really connect, but over time you'll see that you can actually integrate those two together. So for instance, in the beginning, you're going to have to learn how to take your trades, like take a setup when you see it using whatever method you want. Then you're going to have to learn how to manage your trade management. That's going to look separate in the beginning, right? That's going to be two different things in the beginning. Then eventually you can integrate those two together, and that becomes, part of your system. And then you can go towards innovation, where you actually go off the road, off the reserve, and you can begin to create your own, you can begin to create your own, you can begin to basically trust your gut and begin to trust your intuition. But too many traders, they jump too quickly from isolation to innovation. Like they think they can start trading intuitively or from the gut from the get-go. And, as I've said to people in the past, like the people that I coach, especially if you're a new beginner, you don't have the right to trade from your gut in the beginning because you haven't earned it, right? You just haven't earned it yet. So you need to, build that level of experience up before you can begin to, start to push the boundaries and try to look for things that are based on gut feel or intuition. And that's why that kind of 3-step thing, what Etienne, talked about, starting with one thing is so important when you first get going. Otherwise, it's really easy to get lost in the forest if you don't see the trees in the beginning. Okay, so let's move on to trading instruments, and I'll get off my soapbox there for a second. So in terms of trading instruments, there's really a bevy of them you can pick from, and Etienne, you can go on to the next slide. And I just wrote down a few here on this next slide, but as obviously there's stocks, there's mutual funds, there are ETFs, options, forex, there's index and commodity futures, there's CFDs. You can even trade cryptocurrencies like Bitcoin, right? And it goes on. You can trade bonds. You can trade, binary options. It gets deep, right? And so there are tons of instruments you can pick from. And we hear this question all the time: is which instrument should I start out with? Which one should I choose? Which one should I try to master? And that's a good question. So let's move on to the next slide, Etienne. I think the most important thing that I would share, and again, this is my truth. Doesn't this have to be your truth? But what I've seen along my way in my journey is that there is no one superior trading instrument, right? So there isn't one, right? So stocks are not better than options, and options aren't better than forex, and vice versa, right? It just depends on timing. It depends on what point you are in the market cycle. Anyone who says that there's a better instrument is either lying to you, or they're ignorant, or they're trying to sell you something, right? Because there isn't any one superior environment. And what I've noticed, and you can click on the slide again, Etienne, is that in this game, is that you need to kiss a lot of frogs. And what I mean by that is that if you're starting out especially, you're going to have to try a lot of things before you find out what really works for you. And unfortunately, there's no shortcuts, right? Like I started out with options, and I made a lot of money trading options in the beginning. I made, over 6 figures trading options. And if you would have told me when I first started out, like my first year of trading options, I made over 6 figures trading options. And if you would have told me that I would be now trading stocks and futures, I would have said you're crazy. I thought at that time that that was my bread and butter. But again, there's many choices to consider when you pick your trading instrument. So for instance, go on the next bullet point. So some of the considerations, and again, I think there is no shortcuts. You kind of have to try and see what fits your personality. But here are some considerations for you to think about. So number one, if you want to fast forward, Etienne, is the capital requirements. So some trading instruments require a lot more capital to trade than others. So some trading instruments, you can literally start off with $100 account. Let's say, you're trading Bitcoin, for instance. You can start with the tiny account. You don't need to have a big account. All you need is, just enough to get some margin. And likewise, some contracts or instruments require a ton of capital. So like, for instance, if you're trading commodity futures, then, you need to have a pretty big size account to be able to first manage the margin. And second is to manage the volatility. So you also need to think about the volatility because number one, the volatility can really hurt you if you don't know what you're doing. So if you're picking a very, very volatile instrument, then if you're not ready to stomach that kind of volatility, you'll probably make the wrong decisions at the wrong times, and it'll cost you a lot of money. And secondly, you're in it to make money, right? So you don't want to just pick an instrument that has no volatility either, because then you're just sitting on dead money. Let's say you buy a stock, it doesn't go anywhere for like 5 years, and you invested all your money in it, and that's dead money, right? There's opportunity costs there. So you want to pick the right level of volatility, and there's only one way to find out, right? That's in kind of back testing it, forward testing it, and kind of trying things out. So for instance, penny stocks are very, very volatile, right? So that's great. So there's good opportunity there, right? If that fits you, it's not, penny stock is not for everybody. So for some people, they can make a great living at trading penny stocks. But at the same time, I don't know if you guys saw that trader back in December. He decided to go short on KBIOS or KBIOS. Anyone hear that story? It was a pretty popular story back in December. This guy shorted about 30 grand worth of KBIOS, and then it gapped. What was it? It gapped up, I don't know, like 50% overnight, and then he ended up owing the broker like $100,000 or something like that. Yeah, exactly. KBIO. Yeah, sorry, Lev. KBIO. Yeah, KBIOS. Yeah. So. Yeah, so that's that's one of those things where you just need to be aware of that volatility can do that type of can be a double-edged sword. Thirdly is the market participants. Yeah, market Shkreli. So you just need to be aware of the market participants involved in each one of those instruments. That's also a very, very important consideration. Some people just think that all I need to do is fund an account and then I can trade and make money. But you have to understand that depending on which market you decide to trade, you're going to be trading against a whole different realm of market participants. Some markets that you decide to trade, you're going to be competing against the best in the world, right? We're not just talking about the best of the best in Montreal. We're talking about the best of the best. That means the brightest minds with the most capital, with the deepest pockets. You're going to be trading against those guys from the get-go. So while you learn to trade, you're going to be competing against those sharks. Right, so just be aware, because I see a lot of people, they step into these pools, these deep waters, and they don't even understand the people they're trading against. And if many markets you trade in, it's a zero-sum game, right? Futures, for instance, that's a zero-sum game. Someone makes money, someone loses money, and most of the time, the guys who lose money are the guys who just first start out, and they don't understand why they're losing all the money. Is because you're trading against the guys who are the best. That's why they're trading those markets. Mm-hmm. So sometimes trading something like a penny stock is not a bad way to learn how to trade, or just a stock where you can take a very, very small position, like buying 1 share at a time or 10 shares at a time. Then it's not a bad place to learn to trade. But we had a good question. Can you give an example of a tough market? A tough market would be something like the S&P 500 E-mini futures market. That is one of the most liquid markets in the world, and has one of the most, has some of the most aggressive algorithms. I guess it's it's the algo bots are very aggressive there, and they can make that market's very, very difficult for new traders. Even though there's the money looks easy because there's so many opportunities, it's not an easy market to get good at. Mm-hmm. And the final part, I don't want to belabor the point, because I think we can tell our own stories and share why we decided to choose the markets we chose. But it's lifestyle choice, right? So lifestyle choice matters a lot. So for instance, for me, I like to trade intraday, and I really just want to trade the North American hours. I have no interest in trading, because I have a family, I have a couple of young kids. I have no interest in waking up at 3 or 5 in the morning, 6 in the morning, and trading those hours. That for me is would be a terrible lifestyle. I couldn't number one do it, and number two, I couldn't sustain it even if I tried to, right? So you're gonna have to pick based upon, let's say, if you work full time, what hours can you actually stay in front of the computer and trade? So maybe if you do have a full time job, then maybe Forex is a good choice, because then you can if you can stay up late and trade the Asian market, then that's great if you can if you can handle that. But for me, I always had the luxury of being able to trade the North American hours, and that's kind of the markets I've chosen. So why don't we Etienne, let's just get a little interactive for a second. Why don't you share with the audience, why did you choose Forex? What was the determining factor or factors?
Yeah, so I think two main things for choosing Forex. First of all, when I opened my first trading account, I didn't have a lot of money to trade with. So Forex was like the best thing in that case because I could trade basically with like $10 if I wanted to with my broker. So they would allow me to trade with whatever amount of money I wanted and buy as many units of currency as I wanted to.
Yeah.
So that was pretty cool. And then the other thing was also that uh, at the time I was going to school and I had classes during the day, so I couldn't really stay in front of a computer and trade.
Mm.
And most of the time I've been looking at stocks, and then when was the time to buy? So we didn't. So like if I want to trade with stock, I would have to buy either at the open or at the close.
Right.
And most of the time at the close I was away or doing something else, and at the open I was in class too, so I didn't have time to buy anything.
Yeah.
So that was really in terms of like lifestyle and the amount of capital I had at the time.
Cool. Yeah, and those those are great fundamental reasons to pick forex as a trading instrument.
Yeah.
And
Definitely.
the funny thing is, I've never actually traded forex. I've traded ETFs that track currencies, but I've actually never traded forex. So that's something on my to-do list, I guess. At some point, I'm gonna have to try forex. Although I started trading Bitcoin, and that's somewhat, somewhat like trading a currency.
Yeah, it's close to it. Close.
Yeah.
Yeah.
And I'll share my story. So as I was telling earlier, I started off trading options, and the reason I got into trading options wasn't because I did a bunch of research and I found that was going to be the right instrument for me. I was actually that was a lot less planned than that. I actually went, I've told the story before, but I went to a seminar on trading. It actually wasn't even a seminar. It was actually just a sales pitch, by this company back in the day called, I think it was Optionetics. Oh man, I think it's Optionetics, but it's one of them or one of the competing ones. And it was a sales job. And they sold me. They sold me hook, line, and sinker. I was sold. They made it look like it was so easy to make money with options because of the leverage and the fact that you create neutral strategies, and I like the thought that you could apply all this leverage and make all this money with this small account. And anyways, long story short, I made that really big. I made one really really huge trade where I turned my $25,000 account to like a $90,000 account in one trade, and then over the course of several years, I gave all that money back. So literally, I took that $9,000 back down to basically zero again, and I learned a lot of lessons from that, as well as trying to dig myself out of that, because I learned a lot of bad habits, making a lot of money quickly. So I've tried a lot of other instruments. I had to do the soul searching. I had to reinvent myself a number of times, because you'll see as you trade over time, you have to, in this game, you have to reinvent yourself, right? Like I've only been trading for 10 years. I think it's, for some people, that's a long time. For a lot of people, it's like, that's not that long. But over the course of those 10 years, I've seen, a couple of really, really interesting sell-offs where the trading methods that I had and the instruments that I was trading, where I had a positive expectancy, where I had an edge, I no longer had an edge anymore. And so I had to reinvent myself again and pick up, new methods of trading and new instruments. And, that's kind of how I've evolved as a trader. So nowadays, as much as I say, I'm a stocks and futures guy, I just pick the right instrument based upon how I want to express the trade, right? So that's kind of how I see things now. Depending on what I see lining up, this is the intuition part. Depending on how I see lining up, then I'll look for the best instrument to express that trade with the least amount of risk. So whether that's through futures or stocks, the fact is I trade intraday. So the trading options intraday for me doesn't make a lot of sense. So those two products make the most sense because I can use leverage and get out at the end of the day. Anyways, it's a deep conversation. I don't want to. We can get deeper into that as we get to the how we trade section.
Mm-hmm.
All right, so cool. So let's get to some of the tools and resources we use.
Yeah, definitely. So like we have a couple of tools we use to trade, and some of them are the same because some of them are good for any traders, and some of them are a little bit different. So I'm gonna start off with like the basic tools I use, and in terms of trading tools, like you have different, I would say, types. First of all, you have to use a broker. You don't really have the choice to have a broker to trade. Then you have to have a tool to look at your chart, so basically your charting tool. then a tool for your journal, so when you keep track of your trade, and then some information source, although I don't use them a lot. And then we have a couple of other tools we'll share with you. So the tools I use, first of all, my broker is Owenda, which is, I think, a good broker for Forex. They allow you to buy any type of quantity of unit you want, which is pretty cool. So you don't have specific quantities to buy. It's a Canadian broker too, so it's pretty interesting. In terms of charting tool, I use MetaTrader 4, which is, I would say, the main charting package for Forex. And this goes with, I would say, any broker. So whatever broker you have, they often offer MetaTrader 4. And then I use FX Trade also, which is the platform for Owenda. That's like the custom platform. It's pretty good. It's workable with. And then I use a website called Trading View, which is the #1 website for trading. It's a website you have to check out if you've never been there. It's like charts that you can customize and do all type of stuff on them. So it's really good to check out, definitely. You can see currencies, you can see ETFs, you can see stocks, so you can see anything you want, basically. And there's a free version too, so you can go there for free. Then in terms of journaling tools, I use my FX book to keep track of all my trades, and this is done automatically. It's again free, so it's a system I use that just computes statistics on my trade. And yeah, TradingView is excellent. I just saw the comment. Awesome. Yeah, so my FX book keeps track of all the trade and just compute all type of statistics, put all types of graph about how I traded, like what's my performance over a month or a year or whatever the period I want. And this is like the best thing to keep numbers out of my trading trading process. And then lastly is Evernote to keep track of my trades. So what I do is I take a screenshot of my trade and I put them in Evernote every single week. I'll talk about that more in the next section. But Evernote is really great. Like, it's a journal app. You can do anything you want in Evernote, and that's again free. So it's really worth it. And the last resource I use, the last tool I use, which is not on that list because I forgot to put it, is Forex Tester 2. So it's like a tool for backtesting for Forex, and you can backtest manually or with scripts, whatever you want. And it's really well done. So it's really well done because you don't see what's coming ahead, so you can really trade and practice and get a lot of exposure to the market. So as much exposure as you want, which is awesome. I'll talk about that more again in the how we trade section, definitely. So that's pretty much how I use my tools and what the tools I use. And so now I think Houston has a couple of different tools to use.
Yeah, we use a lot of the same tools too.
Yeah, definitely.
Profitly is pretty good too. Yeah, go on, Lev. So the tools I use, we use different brokers. So if you want to jump to my slide, Etienne, I use interactive brokers for futures and stocks. I said options and forex there because options and forex there just because I wanted to let people know they have that. You can trade those as well. But I pretty much trade. I use interactive broker for stocks and futures, and they have options. I don't trade forex. Questrade, I use Questrade as well. I trade stocks and options on there. Actually, I don't know why I wrote down futures. They don't have futures on Questrade, so that's a mistake on my part. That shouldn't be there. But the good thing with Questrade, it's a minor selling point. It's a good one. If you trade a lot of stocks, it's not a bad platform because the buy side for certain ETFs is free. So for certain ETFs, if you invest or if you trade or invest in ETFs, then you get free commission on that one side of the trade. So it's not a bad, you do save some money there. So it's not a bad thing. Cool, Alessandro, another Questrade person. Charting tools. So I use 3. I use one tool called Ami Broker, which most people have not heard of, but I've been using this tool since I first started trading. This tool has been out for a long, long time. This charting tool goes out, has been out since like the Windows 3.1 days. It's been out that long, but it's a solid tool. You have to be a little bit more technically minded because the great thing with that tool is that it's very easy to build your own indicators. And just kind of configure the hell out of it. So I have I've done a lot of configurations to that particular charting platform. I've created a number of custom indicators in that platform, but I use the scanner in that tool as well. It has a scanner which I run on a regular basis, like through my trading during my trading day, I'll use that scanner to look for opportunities. Now, of course, you can use scanners from numerous tools. For instance, your broker. Most brokers have some okay scanners. Like Thinkorswim has a decent one, as Benjamin has shown me before. And Interactive Brokers has a decent scanner, not quite as good as Thinkorswim, but it has an okay one, and I use that one every day. Finviz, thank you, Michelle. That's another good one that we have in the that I would definitely recommend. To really get the power out of Finviz, you do need to buy the more premium version, because you want to get, if you want more real-time data, that is, then you want to buy the more premium version, but it's a solid scanner. Equity Feed, yeah, that's another good one. I use NinjaTrader for my futures trading. So if I want the tick charts, then I'll look at NinjaTrader. And then TradingView, I use that as well. It's really handy, because if I want to pull up instruments across, the different, if I want to pull it up against various instruments, it's easy to pull it up. And for journaling, for many, many years, I used just good old-fashioned Excel and Evernote for the screenshots. But I've since moved on to TraderView. There's a free account on TraderView. That's an excellent journaling tool. There's a free version of it, but I subscribe to the silver version. There's also a gold version. It's probably about what, $40 a month, maybe $30 a month. It's very, very powerful, because the analytics on it are world class. So doing the analytics on your trade metrics, so watching, being able to see your edge, being able to see, your most effective days, your most effective hours, your most effective setups, all that stuff's calculated for you, pulls out of your broker really, really easily. So I no longer have to do that kind of manual crunching that I used to do for many, many years. And, it's one they recommend. S&B Capital, they talk about TraderView quite a bit as well. So but I was using that tool before they started using it. But, since S&B started using that tool, they've even made more enhancements, as some of the S&B guys, I think, pushed to have some new features added. So it's a really, really good one. I highly recommend people checking it out. And then Evernote, I still use Evernote heavily. Screenshotting stuff and just, journaling. I'll talk more about that in the last section. So next slide, if you don't mind, Etienne, is just some considerations for choosing a broker. This is one question we get all the time. Probably like every single meetup, I get this question. TraderView, Lev, it's yeah, just Google TraderVue, and actually we'll post it in the. I'll put some links in the PowerPoint deck, and we'll have it in there. But yeah, that's it. But this is a question we get all the time. Considerations for choosing a broker. So I thought I just put together a really quick slide just to talk about some considerations on how to choose the right broker for you. So here's the easy answer, right? You can look at all these things, all these bullet points that I've written down, these kind of 6 main things, and work your way through those. Or the easiest thing to do is find the broker that everyone else is using and use that broker, right? Like, you don't have to reinvent the wheel. I see some guys, they get way too caught up in the weeds. There's just too much stuff to do already as a trader. If you really have all that time and you really want to do all your due diligence, then cool. Then, spend the time and go through kind of these considerations, which I'll talk about in a really high level. But, if you find a broker that like 90% of the traders are using, then there's probably a good reason why that broker is decent, right? Like, you'll see in this call here, like, a lot of traders use Interactive Brokers. They have a Montreal office. They're an American company, but they have a Montreal office. And that's one that, that is a professional quality platform. You really can't go wrong picking that. Now, you may have some disadvantages because you may need more capital, but if capital isn't an issue, then that broker is one of the best ones. So let's just back up, and I'll just quickly go through some of these considerations. Price, right? So if you are concerned about commission costs, then certainly you can spend some time to research the brokers, compare them based upon their commissions. But nowadays, most of the discount brokerages are pretty competitive. You don't want to be going with an RBC Direct or one of these non-discount brokerages if you're going to be trading actively. All right, if you're going to be trading a lot, then you want to go a discount brokerage like a Questrade or Interactive Brokers or some of these other players who are meant for intraday traders or meant for more active traders. Margin. So if you're going to be trading margin, you want to be looking for brokers that give you good margins. And good margin simply means having to outlay just a little bit of money to be able to control a large amount of buying power, right? So some brokers give you a lot of margin to play with. That's a good thing, or it can be a bad thing, right? We talked about leverage before being a double-edged sword. But if you're responsible and you think that you have the the right methodology for it, then find a broker that gives you great margins. So for instance, I'll give you an example. If you want to trade the S&P futures, the E-mini contract, if you go with Interactive Brokers, then you got to put up about $5,000 Canadian for every contract of the E-mini futures contract that you trade. Now that's not that great. Like there are cheaper ones. I'll give you another. I can't remember the name right now off the top of my head, but there's other companies where you only need to put up $500 intraday margin to control one contract. So that's a 10-to-1 difference there, right? So you can see the difference there. So if margin's a real issue for you, then that's why that might be something worth considering. Speed. So speed of execution, right? So if you put your order in and it's not getting filled, that's a problem. So you need to be doing, you need to be finding those brokers with a really, really good platform that you're getting executed on. Otherwise, that's going to put a dent in your trading edge. Service, that's support, right? So some brokers have terrible support, and that has to be consideration because, for instance, what would you do if you had a blackout at home and you lost power and you had a trade open, right? You had a live trade on and you needed to close it out. How would you be able to get a hold of that broker? Is there like an 800 number you can call in quickly that gets picked up within the 5 minutes or 10 minutes or whatever? Because if you have a broker who only has chat and they don't respond to chat very often, and you run into one of those situations, you're in big trouble, right? Stability. It's gotten a lot better over the years, but obviously there are times where brokers can actually go down, right? Where their platform actually crashes or they have issues with their data. So stability is very, very important. And lastly, ease of use. Just how easy is it, and how is the platform, right? Just how easy is the platform to use. Some platforms like Interactive Brokers, I'm not going to lie to you, it's not an easy platform. It's a professional platform. That means you got to spend time to learn it. So you actually need to spend a lot of time to learn that platform. Questrade, on the other hand, very friendly, like very user-friendly, friendly web-based environment and a friendly, thick client. So a lot easier to use, but then you have trade-offs. You have a far fewer features than Interactive Brokers. So just one final point here before we move on. And that's just around, I'll go back to it again, price, commission, right? People get really tripped up around this. Like they're always trying to, constantly trying to find the broker with the best commissions and the best prices. And at a certain point, like I said before, if you have a real trading edge, like literally, like if you've done your homework and your system has a true trading edge, meaning you have a positive expectancy over a large enough sample size, then you really shouldn't be worried about commissions. If you're picking the right broker that everyone else is trading, and you cannot make money and you're blaming it on commissions, then your edge is not big enough, right? If your edge is that small and the commissions is killing you, then your edge is not big enough. That's just my final comment on that, right? So if you're really worried about that, you need to work on your edge first, rather than the commission costs. All right, so that's my opinion, and I'd be happy to debate someone about that one, but let's leave it at that. Okay, so let's move on to the next slide.
I think, well, maybe just before we move on, I think I've seen and I've talked with a lot of traders recently, and I've seen basically brokers with really like low price, but that ended up just went bankrupt.
Yeah,
so,
good point.
With that, I think
stability. That's another point of stability. Yeah, very, very good point. Yeah. And that just gets into a whole realm of risk management. So
exactly.
You don't want. That's certainly a good topic there, Etienne. And risk management, we can definitely maybe do a webinar on that, because that's part of business planning, right? To make sure that you're not concentrating all your assets in one place. Because we saw that just a couple of years ago with MF Global, right? So that was a bad situation there.
So now we're, I think, in the favorite part for most people, which is the how we trade part. So
all right,
let's go with that.
All right, so I'll try to pick up the pace a little bit, because I've been kind of chatting a little too much, which I was afraid I was going to do. So why don't I just try to keep it to a minimal here. So let's go on to the next slide. And I'm going to share now how I trade. So basically, I trade on average about 3 hours a day. I trade primarily, if you want to go to the next slide, Etienne.
Yeah, it's coming.
Okay.
Small delay.
The first couple hours of the North American session from about 9:30 to 11:30, and I usually have about an hour, maybe half an hour, about an hour in the afternoon session. So I'll be looking for opportunities after lunch for about 45 minutes, something like that. And then if I have any positions still open at the end of the day, I will close that out within the last 10 minutes of the trading day. So, but those are my hours when I trade. So I'm really hunting, the first 2 hours of the North American session. That's where I'm doing the bulk of my trading. I'm trying to, establish my positions in the morning session, and try to hold those for the entire, if I can, I'll hold them till they hit targets or until the day closes. All right. So my style of trading is, I would describe it as trading key areas of support and resistance. I have a bunch of plays in my playbook, quote unquote playbook, and they range the gamut of, as Etienne pointed out, I have, breakout plays, I have pullback plays, and I have reversal plays. Right now, lately, I've been focusing on primarily momentum plays or pullback plays. That's what's kind of been paying the bills lately. But certainly, as any good trader, you got to have numerous kind of tools in your tool belt so that you can change things up as the market conditions change. So let's go to the next slide.
I've got a question for you though.
Yeah.
I've realized recently that most traders have a lot of trouble to draw the key support of the key areas of support and resistance.
Yeah.
So how do you find those? Do you have like some sort of screener, or do you have any sort of tool that you use?
Yeah, my favorite trading method right now, man, this is this same setup that I've been trading probably for the past 5 years. Is what I would consider an opening range play. So the opening range sets the support and resistance levels. Mm-hmm. And so it's completely objective, right? So opening range trading is very, very popular method of trading. It's been around for, decades, right? So what you're simply doing is you're drawing the opening range. You can do it on stocks or futures, obviously ETFs, and you're playing the opening range. So you're either looking for a break outside of the opening ranges and looking for extensions, or looking for reversals inside of that opening range. And the opening range, you can divide it numerous ways. You could say the first 30 minutes of the session, which is what I do for one of my trade setups, or you can even do something as small as the first 2 minutes of the open. And I do that as well. I have a play that I call the early bird play, where I'm playing the 2-minute opening range. So that opening range sets my support and resistance areas. So it's very, very objective. Otherwise, you can definitely get more, like you said, subjective, right? You can draw and look for multiple taps, or there's numerous ways to do that. But for me, that's how I trade the mornings, because I'm looking for opening ranges, and that's my most effective strategies at the moment.
That's cool. All right.
So next, so I want to get into kind of my ritual and my routine, so you can see kind of what I do. This is probably only interesting to people who actually trade. If I share this with people outside of trading, they were like, "Why does this even matter? What do I care about what this guy's routine looks like?" So hopefully you get something out of this. But I went pretty detailed here, so you guys get a kind of a glimpse into how I trade. So I started, as an intraday trader, I think a lot of this has to do, especially with because I take a lot of trades intraday. I make a lot of decisions intraday. Decision making is really what I think is as a peak performance activity, and I really want to be at my best when I enter the trading day. So I have a really kind of ritual, kind of a morning routine that I kind of go through on a regular basis, right? It rarely changes. So in the morning, I'll get up, I'll do some meditation, then I'll start my day with a bulletproof coffee, of course. Get my caffeine in, get some calories, get some energy for my brain, and then I'll just do some journaling, right? So empty the head. What's concerning me for the day? Do I have any emotions popping up? Kind of some stuff that I do as part of my trading psychology plan. And then I'll get more practical. So once I get myself set up in front of my screens, Then I'll check for any limits or stop orders that I may have for any positions I may have held on overnight. Then I'll check for any news coming out that day or for the week. So let's say it's Monday. I want to see all the news events for the coming week, or just a reminder of what's coming out that day. Many years, I didn't do this, and unfortunately, in trading, what you don't know usually usually kills you. That isn't the ignorance is rarely bliss in trading. So it's very important to understand the big news items that are coming out as an intraday trader. Then I want to see how the overall markets are trading, right? So anyone who's heard my presentations in previous meetups, I'm a big believer in this framework, right? Market, then trade selection, then management. But it all fits in that order. First comes the market. So the context has to be the market. So what's the market doing? So I'm going to look at the overall market. I'll look at the Asian markets, how they closed overnight, or what happened overnight, just to see if there's any bearing there. Then see how our North American indexes are doing. The S&P, the Dow, the Nasdaq. Just see how where they're at in the pre-market hours. Then I research just the top 10 stories. Nothing rigorous here. It sounds like a lot of work, but all I'm doing is I'm looking at my broker. It has kind of a summary of the top 10 kind of top stories, or you can use Twitter for this, right? Or one of some other news feed, and just trying to see what kind of narrative is going on, right? I'm trying to begin to build level expectation in terms of what the market expects for that opening session. So what are the major stories? Are there a bunch of tech companies that are IPOing? Or are there a bunch of, are the gold miners getting beaten up again? Or is oil crashing again, right? So what's going to be the major narrative for the day? And yeah, exactly, Michelle. 60% of the market's behaviors or stocks are tied to the market. So getting that context is so important. Then I'll look at the top gainers and losers, right? So who are the guys getting beat up, and who are the guys really moving that morning? Because I want to be trading the stocks in play, right? This is a term that the SMB Capital guys use. They're a prop trading firm out of New York. But I like trading the stocks in play, because as intraday traders, you want to be putting our money where there's a lot of volatility and not picking these dead areas where it's impossible to make money. And then I'm going to look at and think about what stocks are best for me, right? There's going to be a bunch of stuff that's going to be playable, but are they really best for me? Based upon how I trade, I know I trade certain stocks better than others, right? It's just kind of a feel thing after a while. So I'm gonna, focus a little bit more attention on stocks that might fit my profile more. So moving on, where the stock's trading pre-market, right? So just pull up some quick pre-market charts. This sounds like a lot of work, but literally, at this point, I can do all this in 15 minutes, right? It doesn't take me an hour to do all this. I rehearse my trading plan, right? So now I'm thinking in my head, all right, so based upon where the market's moving, now I get to my next mental framework, right? Expectation, anticipation, and then adaptation. I've talked about this before in other meetups. Expectation, I'm gonna have an idea of where the market may go. So I'm gonna anticipate what quivers in my trading, in my book of trading setups may fit, will I be able to use, right? And then I'm also gonna be thinking about adaptation. So if these things don't work out, how am I gonna manage my trades? So I'm going to set alerts for any other ideas I may have. So, I'll obviously do a bit of homework as well. If I have other stocks that I've been tracking for a long time and waiting for them to set up, I'll set some alerts. And then it's a mental and preparation game, right? So I'll get myself ready for the session. And then I'll just kind of watch the E-mini index, just kind of trade in pre-market, just to kind of get into the groove. And then once the market opens, then I start my scanner. I'm looking for those stocks in play. So I run my scanner. It's a very simple scan that I do. I don't do anything really crazy. I'm just looking for stocks with abnormal volume. That's it. And I can share what that means later on, but I'm just looking for stocks that have abnormal volume, meaning they have a lot of money rushing into them that is unusual based upon their regular trading activity. And then if the bulk of that morning, I'm just looking and focusing on those stocks that are identified as being stocks in play, and then trying to express my trades using, my trading systems. And I'll give you an example in a few moments of one of my trades that I took a couple weeks ago. Okay, next slide, Etienne. Yeah, good one, Michelle. Okay, so the afternoon session. So, at 11:30, I try to wrap up. I'm not hunting anymore. I kind of get out of that mode. I'm not actively looking unless something really, really sets up. Then I'll just review my trades that worked well in the morning and kind of see what how things are going. I'll journal a bit, eat some lunch. I'll just try to clear my mind, right? I don't want to be sitting and trying to, trade all day. I've done that in the past. That doesn't work for me. I now know what works for me. And that means I need to get away from the computer, walk, clear the mind, exercise, maybe even meditate if I want to calm the mind even more. Just make some notes, right? Well, what's working for me? What's not working for me? And just kind of get in the right decision-making mode. At 1:30 again, I'll focus on trading the afternoon session. Again, this may only be like 45 minutes. If I don't see any continuations that are kind of that are kind of fitting what I'm looking for, then I won't trade. And then like 3:30, 3:45, I'll look to close any positions that I may have opened during that session. Okay, next slide. And then finally, in the evening, after the market, I will log all my trades. I'll journal. Back in the day, I used to journal everything, right? Like, what was I thinking at this time? What was I doing at that time? Was my back itchy? All that kind of stuff, right? But now, I've been doing it long enough now where I just journal what went well and what do I want more of. What went well and what do I want more of? And I'm just trying to focus on what's working, like what's been successful, rather than having your journal be a place where you beat yourself up. Now my journal is just simply a place where I positively reinforce what I'm doing. Okay. Then, in the evening, I'll review charts, just kind of go over, my basket of stocks that I usually track, a bunch of ETFs as well, just to set up for the next day. And then my evening routine just to wind down again. It's all about getting that good night's sleep so I can show up fresh the next day, meditate, and practice some gratitude, right? So, and I always think, what 3 things went great today and why? And usually, in the morning, I'll do gratitude too. It's like, shit, there's no better thing in the world than to trade. And just to remember that every single day, right? Just having the opportunity to trade every single day. Like, man, how lucky is that? A lot of people, they don't have that opportunity. It's easy to get jaded in trading, right? To have a bad day and forget that it's actually a privilege that we get to trade and sit in front of computers and try to express our ideas through the use of capital. So what an opportunity. Okay, so let's move on. Let's talk about an example trade now, because I'm going a little bit long, so I apologize for that. So let's just quickly go through a trade I took back on the 21st of December. This is actually one of the last trades I made in last year. I took a couple weeks off there because I didn't expect there to be much going on. So I actually have started trading. I did not trade today either. I'll probably start trading tomorrow. But I think this is the last trade I made for the year, and I decided to call it a wrap after I took this trade, or something that was close to one of these trades, which was my last trade of the year. So what I'll do is I'll just quickly go through how I trade, a really simple setup, and then I'll pass it over to Etienne to share with us how he does things. Mm-hmm. But to start things off, I like to think big picture, as I said already, right? It's so important to have context, right? So we got to think about the market first, then we can think about trade selection, and then we think about trade management. So the first big thing is context. So as I'm entering the trading day, as I mentioned before, I want to see what's happening. What's the broader picture, right? So if you see here in this chart, it's a little bit blurry, so I apologize. You see that big long vertical line? That's the beginning of that trading session. So December 21st, that's that trading session. What we had that day was we had a small gap up on the ES. The ES, once again, is the E-mini S&P index. It just tracks the S&P 500. Index, and we had a feeling it's been a protracted downtrend on the 15-minute chart. This is a 15-minute chart, by the way, a 15-minute chart. But that day we had a small gap up, right? So I love trading the ES, and I love watching it because I've trading for many years. I have a really good feel for it, and I based upon how I look at the markets using opening ranges and watching for gaps. Sometimes I have a very good feeling whether or not these gaps can be filled. So on this day here, we had this small gap up, and small gap ups like this is a really, really good opportunity for them to fade in that session. And this is kind of what I kind of had an idea for this as I was getting into the session, but it had to line up with the actual the price action. Let's go to the next chart. So even bigger picture, here's the context. The next chart is actually a daily chart taken off of TradingView. The red arrow, which will come up in a few moments.
Yeah, it's there.
Okay, the red arrow, shows you that day. So that day is basically an inside day, as I kind of said in the last slide. the market, even though it gapped up, it was still inside the previous day's range, right? So it's fairly a consolidation day unless it breaks out of that range. So I'm cognizant of that.
Yeah. See, Wilson, are you there? Right. So, Wilson, are you there? That's cool. So, for some reason, am I the only one who doesn't hear Houston, or you guys cannot hear him? Yeah, that's right. Let's see if we can get him back. Okay, that's good. So I'm not the only one. Awesome. We'll just try to get him back. Okay, so we just left. Yeah, power went out. Maybe that's possible. Yeah, sure. Okay. Yeah, so I'll just move to my section and then just go back there afterward. So as I told you guys, I trade Forex. I've been doing that for like a year, I would say seriously. And I went through a lot of strategies, so a lot of different ways of like a lot of different ways to trade. I would say most of them were not successful. Most of them I failed at them simply because I was changing strategies all the time. And so today, what I'm going to share is mostly what I do. I'm just going to remove that. Sorry about that. This is, yeah, this is Flux, LUX. I'll just remove that thing. It's pretty, all right. So this is what I trade today. So I do swing trading, which is I hold for a few days. And I do that on the 4-hour chart and the daily chart. I'm looking only for high probability trade because I want to trade only what's profitable, what's going to give me less losing streaks over the long term. And what I do is I follow about 20 currency pairs. So I have 20 currency pairs on my trading platform, which I follow every single day through different times in the day, and I trade based on those. So I don't take any other trade that I hear on the news or stuff like that. So typically for me, I'm not gonna tell you exactly what I eat for breakfast or what I do at night, but basically what I do is I have my morning routine just in the morning. So I do meditation, exercise, and reading, which is a good thing to get started in the day. And then what I do is I look at the 4-hour chart first. So the 4-hour charts has a closing candle 6 times per day. So 6 times per day, there's a new candle, and I look at, I would say 4 of them because I'm sleeping a little bit in the night. So at 9 a.m., I look at the first candle on 4-hour chart. Then I go back at 1 o'clock to look at the 4-hour chart. Go back at 5 o'clock, and then I look at the 4-hour and the daily chart because the daily chart closes at 5 p.m. Eastern time, which is the New York close basically. And then I go back at 9 p.m. to look at the 4-hour chart, see if I can find any setup, anything I can trade, and if not, then I just don't take any trade. That's how it works. I have what I call also weekly improvement. So I think it's important to have some sort of process in place to get better every single week. So what I do is I fill my journal at the end of the week on Sunday or beginning of the week if you want. So filling my trading journal on Sunday based on Evernote. So I take a screenshot of my trade, put them in Evernote, and I have all my data in my FX book, which track everything automatically. So that's pretty cool. Then the other thing I do is I do 2 hours of backtesting every week. So on the weekend when I have some time to just do backtesting, just to build up my confidence and just to see how my setup works and really know that I have an edge. And it's also a good thing to get some exposure to the market, to know exactly what you're looking for and just get practice, get more exposure, basically. And I really recommend it for any trader. like if you do Forex, it's pretty easy to backtest. Just get the program Forex Tester, stuff like that. You can backtest as much as you want and any date you want, basically, which is pretty cool. And I just do that to practice. So that's how I work. Well, the other thing I should mention about this is I do manual backtesting. So a lot of people will try to do automated backtesting. So they will write a script and they will backtest it without looking at the chart. And this is good because you kind of know you have an edge, but you don't really know how to do, like how to trade. So if you're going to trade manually after that, I think you really have to backtest manually too. That's my opinion. Now, in terms of trading techniques, so what I do is I look me too at support and resistance zone or Bollinger Band breaks. So Bollinger Bands are an indicator that you have on any trading platform, basically. So I just look at that. If it breaks outside and goes back inside, then that's a trade I can take. And I look to have confirmation with price action pattern, basically. And I'm going to talk more about those. So in terms of patterns, I have the one you see here. I think there's another picture. Awesome. So this pattern here, for example, would be an engulfing bar. Sorry. So it's a bar that covers all the previous bar. So if I have this breaking out of a Bollinger Band or at the support or resistance area, then I could take a trade. While this one would be at a support, like support zone, because it's bullish, right? So it's a blue candle going up. So if I would have that, I could take a trade. And same thing here. This big candle here, the red one, is an engulfing bar, also a bearish one. And so if I had that at a resistance zone, then I would take a short trade. So I would sell the market at that point. And if I had also a Bollinger Band break, like a break, it's not a breakout, it's a break. Michelle will correct me on that. So I would take a short trade at that point. So this is an example of a trade I took pretty recently. I think it was last week. Yeah, because you see 2016 below. So I had this engulfing bar right here, breaking out of the Bollinger Bands and engulfing the whole bar here. So having a lower low than the previous bar and almost no wick at the end of the candle. So this is like a perfect setup. So what I did is I just entered after the candle. I just put a stop loss above here and I just went on a trade like that. What I usually do is I set my first take profit to the first, like the closest resistance zone. So in that case, the zone was around here. I took the first profit of my position here. And then the second take profit, I just leave it to see where it goes. So I close the second half of the position only when I get a significant candle in the opposite direction. So this is how I trade, basically. Now we're pretty much done with my section about how I trade. I'm just curious to see whether Winston was able to come back.
Yeah, I'm back. I'm back, man.
Yeah, he's back. Awesome.
Yeah.
He's back. So we'll be able to go back to that section. And was it here?
Yes. No,
Yeah,
yeah, right there. It's fine. Just when I was getting to the meaty part, my computer decides to actually crash.
Awesome.
All right. So I'll let the slides catch up. So where was I? So yeah, we're just talking about context, right? So we were, I'm watching for opening range breaks throughout the trading day. Number one on the indexes, because I want to know the overall, market context. I'm watching that because obviously if the market's breaking down, then I probably don't want to be looking for a bunch of longs in terms of stocks, right? Because if the market's actually breaking down, selling off, it's probably a poor time to be trying to buy stocks. So I want to be, trading in the general direction of the market. Now, if I actually see a compelling trade setup on the market, like on the indexes, I'll either express that trade either through, in this case here, I could actually just short the ES if I see it breaking out of the opening range and breaking down. Or what I like to do lately is, I like to also trade the VIX. So I'll use the VXX as, as an inverse product, right? So I just trade the VXX and trade the because that tracks the inverse. It's basically the inverse of the SPY. So just a bit of context here. So that little red area right there, it shows you like 11:05. The market breaks out of its opening range. So you'll see these two horizontal lines each day. Those two in blue. That's the 30-minute opening range. So at 11:05, you'll see that big long candle breaks out of that opening range, and that tells me now that the market has broken down. usually what you'll see, and I encourage anyone who's interested in this type of trading to do your homework, right? Like, don't trust me for what I'm saying. Do your homework, and you'll see for yourself that the opening range has a lot of predictive power. Generally, if the market can stay above the opening range, it's generally bullish for the market. If it can stay below the opening range, that's generally bearish. And you should probably be looking for trades in that direction. That's a kind of a good guideline or something to think about. So in this example here, what makes this pattern even more compelling? So number one, we have a big long message bar that breaks out of the opening range. The bar before it is actually also very significant, right? So the bar before it's actually a doji bar. It's kind of a narrow range bar as well. So I have these little blue arrows that you see underneath some of these bars. Those little blue arrows just help. I don't actually use them that much anymore, but I paint them for some of the clients I coach, because it shows the narrow range candles. Narrow range candles meaning those NR bars, narrow range. They're NR5 bars. The most narrow range candles within the past 5 bars are sometimes statistically significant. So the little bar there before that breakdown is not a narrow range bar, but it is a significant one because it's kind of a doji pattern, meaning we had some indecision. And so, folks were kind of like unsure what was going to happen there. And then the sellers had it. They broke right through the opening range. So at this point, I'm like, all right, it's time to go short. How do I want to, based upon, the trade setups that I want to express, what am I going to pick? Am I going to short the ES directly? Lately, as I just said, I am actually in favor of going long and buying the VIX. So if you go to the next slide, Etienne, I decided to buy the VIX. And so that big, that little green arrow shows the exact same time frame. This is a 10-minute chart, and you'll see that that green arrow is 11:05. So that's what we saw at 11:05 on the VIX. So we had the same thing, but in the opposite direction, right? Also, what you see in the VIX, the VXX, again, it's the volatility index, is we had the VIX coming out of what I call a broadening wedge or microphone or megaphone pattern. And so it broke out of that, which also means that's a valid setup. That's another predictive pattern that I watch. So we have a couple of compelling things now that are really, that I think are confluences that want me to take this trade. So this is, the previous chart I showed you was a 15-minute chart. This is a 10-minute chart. Let's go to the next slide.
Yeah,
so
people were watching this, like, where did you enter the market?
Yeah, you'll see in the next slide. So the next slide, this is my execution chart, the 2-minute chart. Okay, so the green arrow, that's the bar that I entered in. So that's the you'll see, like, I have these little light blue dots or light blue arrows. Those are actually an indicator that I use just to show me legitimate setups on this one particular pattern that I trade. I call it an early bird setup. There's some criteria around it, but it's not difficult. Basically, what I'm looking for is an opening range break on the 2-minute chart. So you'll see that blue arrow, that blue horizontal line is the opening range. It broke out of it with conviction, and I want to get long, basically the high of that, what I call a message bar. So that bar there that broke out of the opening range, it's a big long white bar, broke out of the opening range. I call that a message bar. And so I want to buy the highs of that bar because I want to get filled. The lows will go either below the low of that bar or even 0.3%, or I'll take 1.3 risk to that's where I'll put my stop. And so basically then I'll draw this measuring tool. So I just use a Fibonacci tool, and I just draw my extensions, right? So I draw from the bottom of that bar to the top of it, and I'm measuring my risk to rewards, right? So the bottom of, the length of that bar is 1 risk to reward, right? And you can see how far the price action went. So I'm basically looking for this thing I'm basically looking to hold this thing as long as possible. But I understood that day, the market had a gap on the ES. And if that gap got filled, that was probably a good place to try to take profits. And that's what I did. So I sold half the position when the ES gap filled. So filled the gap. And so I got filled here for 21.72 for 4R. And then I trailed my stop to 3R, and I got stopped out for the second half for a blended profit of about 3.5R. Mm-hmm. And so that's very, it's my method of trading, it's very mechanical because the setups are pretty well defined. So I would highly encourage people to have very defined setups. Like in Etienne's, you can write that on the back of a napkin. Mine as well. It's very simple, the rules in terms of how I enter. I'm looking for opening range breaks on with message where there are message bars. That means there's significant buying interest, and it fits in the broader picture of the market. And so that's how that trade played out. So you'll see these types of trades every single day. And again, in this particular case, I decided to express the trade on the VIX, but this exact same setup works very, very well on stocks. So usually the bulk of my trading happens on individual stocks. I'm looking for stocks that are in play, like I mentioned before, and I'll look for opening range breaks on stocks, either on the 10-minute chart, the 15-minute chart, or even on the 2-minute chart if it fits the criteria. All right.
Yeah, just to answer a few questions right here, like R is probably the return you get, right, or the reward.
Yeah, risk to reward.
Yeah.
Risk to reward. So if I'm risking, if let's say I'm risking 10 cents, then that's if I made 10 cents, that'd be 1R. Right? If I made 20 cents and I'm risking 10 cents, that's 2R. So in this case here, I made 4R on half the position. So let's say you're risking $100, then you would have made $400 on the first half. Right? So if you trade, and again, this is the idea: is you just size you size your trades based upon the size of your portfolio. Usually, I risk between 0.5% of my portfolio to 1% of my portfolio. Right? So if you have a large portfolio and you're risking, $1,000, then on a 4R trade you make $4,000. In this example here, you made 3.5R, so $3,500. So for me, it's all about R's, and that's kind of how I keep my head in the game. So I'm not thinking about dollars and cents. I'm just thinking about making good decisions and not getting worried about P&L. Because
how do you determine your R, like your possible reward? Is that based on your strategy that you've backtested, or is that?
Yeah. So there's a number of things. So I only want to be taking trades where I think there's going to be two, the standard 2R or higher, and I'm looking for stocks that have basically, if I'm going to be playing individual stocks, I want to be buying stocks that have no overhead resistance. So this is not an example because this is an ETF, so it's not the same. This is the VIX contract, so it's not the same. Let's say I buy an individual stock. I'll pull up the daily chart and make sure the stock has no near-term resistance that will stop that move, right? So I want to be looking at that context because I know that if I don't pay attention to that, then my estimations for where this thing could go is not grounded in reality, right? So in this case here, I knew that the S&P had a chance to gap fill, and so drawing that out, I had the chance that this thing was going to move higher, at least higher than 2R. Does that make sense?
Yeah, it's cool.
Cool.
Yeah, so we've been going through that section already. So
we have one question from Lev. The opening range, you'd say, would be the first 5 minutes or so. Yeah, you can really play with it, right? So it depends on how active you want to get. Yeah, for instance, if you trade the 15-minute chart, then a 30-minute opening range is perfectly fine to look at. Now, I look at the 2-minute opening range. I have one setup where I actually look at that 2-minute opening range, and that gives me a lot more plays, but then you have to be a lot faster too. So, if you're interested in the opening range, probably a good place to begin is the 30-minute opening range. The 5 minutes actually very compelling too, but the 30-minute will give you some really good insights if you want to play with that. But yeah, there's no magic. There's actually, you'll see that there is no magic. Just like there is no magic moving average, right? Like everyone says it's the 5 or the 10 or the 15 or the 20, but you can make pretty much anything work if you do it consistently enough.
So we're kind of done with the how we trade part. Now we're gonna go more into question and answer. So if you guys have any questions, just type them in the chat box, and we'll try to answer them right now.
Do we have any questions? We're going a bit long today, so I appreciate everyone for hanging on.
Yeah, it's pretty cool.
In chatting, so thank you guys, and we're gonna keep finding ways to make these things more interactive, and maybe try to find ways to have folks even post, grab the mic.
Yeah, and I would say if you guys have any suggestion of topics we could cover in the future, it could be good to let us know. Or either type them in the chat box or just
Yeah.
email us or something.
Yeah, with a question from Lev, mentioned a prop firm in New York. Yeah, SMB Capital.
Yeah.
Yeah, SMB. So I'll just type it in. I think Michelle already typed it into the pot earlier as well. They have a really good reputation, and
Oh, prop
they
firm
have
in Montreal.
yeah. There's a number of prop firms in Montreal as well. I think we have a few guys in the meetup group here that are part of prop firms. There, we had one guy on our last meetup, and Alessandro, you got to tell us what instruments you trade. But we had one guy who came out the last meetup. He was actually an owner of a prop firm, and he was looking for traders to join his prop firm. He was actually in the South Shore. I can't remember anymore exactly where he was in the South Shore. Do you remember, Etienne?
I wasn't there, so.
Oh, sorry, you weren't there. My apologies. So yeah, that's another prop firm. So there's a lot of around here in Montreal. I won't say a lot, but there's a good half dozen or so.
How do you feel about them now?
Which ones?
Well, the one in Montreal, I guess.
I don't have too much experience with the ones in Montreal, to be honest. Yeah, I can't say anything about them. Old Longueuil. Okay, thank you, Miguel.
If you don't get okay.
Yeah. If anyone trades Forex or interested in prop firms that trade Forex, then there was one gentleman who was looking for prop firm traders. You could trade. Again, the benefit of prop firm trading is that they'll teach you to trade, and you get to trade their capital, right? The only tough part is that it depends on the revenue split. It might be hard to make money if you don't have an edge and you're trying to learn. It's a tough business because you probably won't have a paycheck for a while if you're just beginning. So it's you don't get paid to learn. You got to pay. You have to perform to make money in this business, right? So just be aware of that.
But it's definitely good to get a bit of support too, I guess.
Yeah, there's some. Yeah, that's the thing. It's like there are some great prop firms and there's some bad ones, right? Like I've talked to traders who were part of prop firms and they got zero training. They said they were going to get training, but they got zero training. And so and there's the opposite side too. You have some prop firms who have amazing in-house trading, right? So it's just like anything. You got to do your due diligence and try to find the right prop firm for you if you want to be a prop firm trader. Mm-hmm. Yeah, exactly, Lev. Some of them are so. Yeah.
I think I might answer that question right now. Do you take into account the macro fundamentals when you trade Forex? And for my part, no, I don't take them into account. Simply because I think they're valuable over the really long term. So if you have something in change in the GDP or something like that, it's going to impact the market maybe in the long term. And I'm more considerate into the shorter term, like more swing trading. So in that case, I don't take it into account. I just look at news a little bit just to make sure that I don't trade too much at that time. But other than that, I don't really take news into account.
So would you hold on to a position, or would you take on a position if, let's say, FOMC was coming out like the next day or that week, or would you, or you don't care about that?
So usually I don't care about that. The only thing is I won't enter a position if I know there's a news coming soon.
Okay.
So if there's a news the next day, I won't enter a position. But if it's like 2 or 3 days ahead, then I will enter anyway.
Okay, good to know.
Yeah.
Alessandro, are you familiar with any equity prop firms? There's the one in the old port. Do they do stocks, Etienne? Do you know the IOTAF guys?
Yeah, they do training. They don't do prop. I don't think they do trading. I'm not sure about that.
Oh, okay. I don't know if Sagan is. I don't know if he's in the room tonight or not. But I can't remember the name of his prop firm right now. So maybe Alessandro will take this one offline because I can't remember the names right now. But there are some equity prop firms in Montreal. Andrew had a question too. Question on TFSAs. Mm-hmm. Are you permitted to trade ETFs and options? Definitely, you are. You can definitely trade ETFs. Options, you can only trade options if it doesn't require margin. Right? That means no selling of options, essentially. Right? So you can do covered calls because obviously you have the stock, and so you can sell the call on it. But you cannot do any selling of options. So that means no naked short sell, no naked selling of puts, and no naked selling of calls or or more complex spreads, which require the selling of options. But you can go long options, right? You can buy a bunch of calls, a bunch of puts to protect yourself. All right. So great questions.
Yeah, I think we can move on right now.
Yeah, let's wrap things up then.
The question. Now, the next thing we want to do is just a little bit talking about what we're doing every single day, what passions us a lot. And in my case, it's really my blog. So I've been starting that blog and podcast, DesireToTRADE, a few months ago, I think in September. And so I would really like if you guys can just check out the podcast. So you can go at DesireToTRADE.com/podcast, and you'll be able to see all the episodes of the podcast. And just recently, I've put up a new post about the top 5 podcasts of 2015. And so it's really great to see like what was done and what's were the most watched. I have some on automated trading, some on psychology, some on more like story type. So it's really good to see all that stuff. And it's inspiring to hear stories of trader, I think. And every single Monday I release a new podcast, so you can just check that out. It's on iTunes and Stitcher, whatever you like. And so I just would really like if you guys can check that out. It's really simple to do. And the other thing is I'm trying to get more present on YouTube right now. So I'm trying to do videos a little bit more often. So if you guys can just check out DesireToTRADE.com/YouTube. That's my YouTube channel. You'll be able to, if you can just subscribe, it could be awesome. I'll try to publish videos pretty much 5 or 6 days a week now to grow my presence there. So if you guys can just check that out, could be really great. And again, DesireToTRADE.com if you want to get any information, download my free checklist or stuff like that. I have a lot of stuff for free. I even have a Facebook group for Forex traders. So if you want to go there, it's all free for now. So that's about it. Just check that out. I just thought we have any question. Which book do you guys recommend for technical analysis? Well, okay. Usman, maybe you can answer that, but there's a lot of books for technical analysis.
Yeah.
And one that I liked for Forex is called, it's by Katie Lean, but it's really good. Can't remember the name. I think it's called The Little Book of Forex Trading or something like that.
Yeah, John J. Murphy's obviously got the Bible when it comes to technical analysis books. That guy, some of those books are they're like encyclopedias. So good, yeah, great books to check out, Sandro. One of my favorites, more of a recent one, which I think is pretty good, is one from Adam Grimes called "The Art and Science of Technical Analysis." That's a good book too. It's it's modern, and it's actually I think it's a very solid book. So it's definitely I would recommend that one. And Adam Grimes, check out his stuff too. He's a solid guy, very knowledgeable guy. So he's got a good blog and podcast as well.
Yeah, that's cool. There's also one by Michael Covell. I think it's called Trend Following.
Trend Following, yeah.
And Trading for a Living, I think, by
Alexander Elder.
Yeah.
Yeah, classic one.
Yeah, it's pretty good.
Yeah, I'm not a fan of his, but his books definitely got me going when I first started trading. So
yeah.
I remember that stuff. Yeah. Oh, and the last one I recommend. This is one I recommend to all my clients. Who I coach with is Technical Analysis Using Multiple Time Frames by Brian Shannon. That is a good title. I can't believe I forgot that one. But that one, Technical Analysis Using Multiple Time Frames, Brian and Shannon. That is a very good book, and you see a lot of traders. That's a legitimate book. Yeah.
Cool. So we'll just move on. If you guys can check out DesireToTRADE.com, it's awesome. If not, there's also Houston who has a lot of stuff. So go ahead, Houston.
If not, I think you can do both. You can check out some Etienne stuff and my stuff.
Yeah.
So yeah, just a quick plug for me, and a lot of my stuff is just about sharing my story that some of the experiences that I've had as I've been trading. Just kind of sharing my musings and stuff that I find interesting. But you can check out my blog, thetradingedge.org. I also have a podcast I started last year. My podcast is I cover a bunch of themes, trading as well, but a lot around the peak performance of trading. So I interview, that's kind of the slant I have when I interview the traders I interview for my show is how they got to where they are, and kind of what makes them a peak performer. So I'm trying to squeeze out kind of those little nuggets from these professionals that I interview. And I have a few free online courses on my blog as well. So I have my most popular one is one called Creating the Ideal Trading Mindset, which is actually inspired by a presentation I did for one of our meetups. I turned that into a little free online course. So you can just go to tradingedge.org/courses and check out those free courses there. They're all, a bunch of videos, PDFs. So it's a pretty good walkthrough of some of those topics. All right.
One more question. I really like that. Which professional trader did you learn from to trade?
You want to take that one first, Etienne, or you want me to go first?
Yeah, I'm going to go, but I'm going to give a bad answer, which is I didn't learn from anyone first. So I was just looking online. I just was searching online for stuff. And I was going in any direction I could, which is not the best way to do it, but that's how I did it. And I think now I'm learning a little bit more from other people through my podcast and stuff like that. But it's really a whole lot of people, so it's not one single person.
Yeah. No, I'm afraid to say that I had the same answer as you when I first started off. I wish I'd sought mentors and coaches earlier on, because when I first started out, I did like Etienne. I just tried a lot of stuff, a lot of shit, and I just try to figure out what stuck. Unfortunately, it's a very, very hard way to learn. So if you can, certainly seek out mentors and professionals or coaches to help you along your journey. Because if you think about it, all true professionals across any endeavor, they all have coaches, whether we're talking about, sports athletes, musicians, martial artists, it doesn't matter, right? They all have coaches. So to try to think that we can enter into an endeavor like trading, which is one of the most competitive arenas in the world, and to try to figure it out on your own, man, that is insanity, right? And unfortunately, I was stuck there for many years. I was kind of in that no man's land of, thinking I had figured something out, but then, kind of taking one step forward, two steps back, and then, kind of that kind of game. So I was frustrated for many years. And, probably that's what turned around my trading, was when I decided that I had enough. This ego thing wasn't working for me anymore. I had to get out of my own way and just kind of suck it up and seek assistance from coaches. And so now I've sought out lots of coaches. Man, I invest heavily in coaching. I probably spend about $10,000 a year on coaching. So, I just finished doing coaching with Randy Howell, who's a trading psychologist. I went through his program late last year. I'm signed up for do another one this year, another trading psychology course with another gentleman. I've had a lot of, systems coaches who taught me numerous systems, systems and setups, from, trading e-mini stuff to trading stocks. So, you all have to, you got to find out what fits for you based upon where you are in your journey, right? So there's lots of different coaches out there, and you kind of need to find out which ones work for you and based upon what style you're trading. I hope that helps.
Yeah. So last announcement, maybe you want to go.
Oh yeah, last one. So again, thank you everyone for joining us today, man. Thanks for sticking with us through all of our technical difficulties. I promise it'll get better from here on out. Thanks for letting us go long as well. So we did go quite a bit long. So thank you for staying up. Our next meetup is on the 20th of January, and it's going to be in a different place than where we usually hang out. So usually we've been hanging out at the Houston's. That's my restaurant downtown, besides Square Victoria. But this month we're going to be at the Bitcoin Embassy on Saint Laurent, because the theme of this first in-person meetup of the month is going to be Bitcoin. So if you're interested in Bitcoin trading, then we're going to get deeper into Bitcoin trading. But if you just want to hang out, there's going to be lots of time to socialize and talk to myself, Etienne, and other traders. And we can talk about stuff outside of Bitcoin as well. So hope to see as many of you guys out there as possible. It's always a lot of fun to catch up and meet in person. These are fun. This meetup with webinar stuff has been an interesting experience so far, but nothing beats actual face-to-face and hanging out time.
Mm-hmm. It's pretty crazy because we have 7 people right now online, but like those people are like the most motivated trader and the most ambitious trader, I suppose, right?
Yeah.
It's amazing.
Yeah.
I'm really glad to be able to do that and have people watching that also.
Yeah.
Really cool.
Absolutely. So thanks guys again for coming out tonight. And if you have anything else for us, man, just drop us a line in the meetup room, And Etienne, I think we're going to be sending out this recording in the next 24 hours, right? If you ever want
Yeah,
to.
well, yeah, that recording will be available like 2 minutes after the call is ended. So
Perfect.
yeah, we're gonna send that as soon as possible, definitely.
Cool. Well, on behalf of Etienne and I look forward to meeting a lot more of you guys in person and catching up until the in-person meetup or until the next webinar. I hope you have some good trading.
Yeah, it's cool. Awesome.
Thanks, guys.
Have a nice evening, guys. Bye.
All right. Cheers.